Everybody, welcome to my Intermediate Accounting 17th edition video solution walkthrough. This is for exercise 1629. This is from the Intermediate Accounting 17th edition textbook. Authors are Don Kiso, Jerry Weingant, and Terry Warfield. The question used in this presentation is copyright 2019 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. This solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or Wiley. For this particular question, what I'm going to be doing is I'm going to be sharing with you some brief internet research that I did on talking about stock appreciation rights. So the first thing is going to be like when we're going through and looking at stock appreciation rights, what are those? It's essentially we're giving an employee the stock appreciation without actually giving them the shares. And so if I look over here, this is from Up Counsel, stock appreciation rights, everything you need to know. This article was provided by an Up Counsel lawyer. And they're asking me if I want to talk to a top lawyer for free, but what are stock appreciation rights? So this is something that if you want to go through and check out, I will try to remember to leave the links below when I show through and do the video. But the other one over here is what is a phantom stock? It's not a Scooby-Doo mystery. Rather, what the phantom stock is it's just something that is like a shadow simulated stock or phantom shares. It's really to give somebody the benefit without the equity really kind of going out. And you can kind of and then per their discussion, and I agree with them, it's like if you're an S corp, LLC, or partnership or other business entity that is limited in its ability to award stock, this can be a way of giving equity to those individuals. So the other part of it too is that when you're awarding all of these stock options, just make sure you're talking with counsel or you talk with a tax advisor to ensure that you're following whatever kind of reporting may be required. So Bedford Company issues 150,000 stock appreciation rights to its officers, entitling them to receive cash for the difference between the market price of its stock and a pre-established price of 10. So the first one is the fair value of the SARs is estimated to be $4 per SAR on December 31st, 2017, $1 on December 31st, 2018, $10 on December 31st, 2019, and $9 on December 31st, 2020. The service period is 4 years. And the exercise period is 7 years. Now, one of the things that's implied is that the vesting is going to be 25% per period because it is 4 years, and that's how they're answering it. So we're going to make that assumption. But when you work at a company like Amazon, they vest all their stuff. I think 80% of it vests in year 4, probably for a very good reason, because it can be a challenging place to work. But let's go ahead and let's go through and figure it out. So it's asking us to prepare a schedule that shows the amount of compensation expense allocable to each year affected by the stock appreciation rights plan. So in 2017, so 2016, because they were granted on December 31st. So what we're more concerned with is the first year. So we have the SARs. Excuse me, actually, I can't call it SARs, that stock appreciation rights. If I call it SARs, I think that's some sort of a disease or something that came out. So if we see SARS, severe acute respiratory syndrome, right? So that's not stock appreciation rights. You just got to be careful with those acronyms, right? So the fair market value of this is going to be $4 per SAR. So the total value for the first year is going to be $600,000. Now, what's important to remember is that this is the total value of the SAR. However, for us, because we're going through and recognizing this as essentially we're going through over here and we're recognizing this over a period of 4 years, the amount for 2017 that we're going to go through and recognize is going to be 25% of that. So this is going to be 600,000 times 25%. And so that's going to be the expense. When we record the expense, we're going to record stock, or we can say compensation expense. It's probably the better word for it. It's not stock compensation because we're settling this in cash. When we have a SAR, a stock appreciation right, this is going to be something that should be settled in cash. So, and what I'm going to credit over here is liability under stock appreciation plan. So the amount I'm going to go through and record, it's going to be right over here for 2017. I'm going to debit compensation expense. I'm going to credit the liability. What's really important over here is that, and I'm going to say it's like our liability. Basically for this, the liability is 150, so the expense will be 150. This is going to be the number we really are going to be computing in order to figure out what our liability is. So this is as of 12/31/17, and this is our balance as of 12/31/17. So that's how we do the very first one. Okay. In the second year of 2018, still the same amount of stock appreciation rights. However, in this case over here, for 2018, it's now worth $1. Okay, so the fair market value of the stock appreciation right is $1. So the total value here is going to be 150, right? Now, how much is the liability going to be? Well, the liability is going to be 150 times 50%, or 75,000. So this is going to be 150,000 value times 50%. Why is it 50%? Because we're in year 2 of 4. So we're going to accrue for 50% of that liability. So my liability down here is going to be 75,000 on 12/31/18. So again, when we're dealing with compensation expense for a stock plan, what's going to happen is that my expense is going to be, well, what is it going to be? The way I'm going to determine the expense is I'm going to analyze the difference between my liability from year over year. And in this case, my liability is actually decreased. So over here, what I'm going to do on 12/31/18 is I'm going to go ahead and recognize, I'm going to credit stock compensation expense by 75 grand. Because the liability has decreased. This is really what I'm kind of focused on right over here. Okay, so my expense, believe it or not, is going to actually be a negative amount, or 75,000. And you should see that as a commonality when we're dealing with stock options, stock appreciation rights. Okay, now in 2019, the value of the stock appreciation rights has gone to 10. So the total value of this is now at 1.5 million. Now, how much of the liability do I need to recognize for the 1.5 million? Well, it's going to be 1.5 million times 75%. And why is it 75%? Because 3 of the 4 years have vested. So this is going to be 1.5 million times 75%. So over here, the liability I need is 1,125,000 as of 12/31/19. So the entry that I'm going to need in order to, my entry to compensation expense is going to be 12/31/19. That amount is going to be $1,050,000. So this will be my compensation expense for 2019. Okay, let's now go to the final year. And for the final year, the value of it was $9 on December 31st, 2020. By the way, If you want to get access to this textbook, just go to zlib.org. I believe I have other videos that show you how to do it. I know my printing can sometimes be small, but again, that's just something you want to go ahead and look at. Okay, so right over here, the total value is going to be $1,350,000, and my liability is going to be $1.35 million at 100%. So over here, my liability is going to be the full amount. And my expense for this year, let's just do it over here. Okay, so now as I come over here, my full liability is $1,350,000. So the expense I need to get from $1,350,000 to $1,125,000 is going to be $225,000. Okay. And if I add up all the expenses, cumulatively $1.35 million, which is ending up to be the final liability. Okay, now, so the journal entries that we would be doing, we can just kind of take them from the T accounts. This is asking us to prepare the entry at December 31st, 2020 to record the expense, if any, in 2020. So this would over here would be 12/31/20. I would be debiting compensation expense for $225,000, and I would be crediting liability under stock appreciation plan. Okay, lastly, over here, prepare the entry on December 31st, assuming all the stock appreciation rights are exercised. So right over here on 12/31/20. So the way I'm going to settle this is with cash. So I'm going to debit liability under stock appreciation plan. I'm going to credit cash. Remember that before you go through and do this in real life, make sure you're talking with a tax person or your tax advisor, because you probably are going to have to do withholding from these amounts. So to record settlement of stock appreciation rights. Okay. And I think that that's everything for this particular question. So I want to thank Wiley for allowing me to make this video. Please don't forget to like and subscribe. I'm almost at 1,000 subscribers. I'm hoping to do a bit of a giveaway once we get up to that 1,000 number. And if you would like to see other solutions, please feel free to ask for them in the comments to the video. Have a great rest of your day.